My name is Bashir, and I'll be explaining to you the things you need to understand in market structure. Remember that market structure is trading the overall behavior, okay, in the market, like the overall framework or the overall behavior, or the overall direction, or the overall chart move or pattern in the market. And the market structure is broken down into 4 different parts. In my own view, the first part is a trend. Okay, you must be able to understand the trend, and it is always said in the market that the trend is your friend, right? So the trend is also always used to check the directional bias in the market. The trend could be the uptrend or the downtrend or the sideways trend, or they call it the ranging trend, which normally exists in the Asian market. So in the uptrend, you can have moves showing or moving this way, creating a new higher high and higher low. Take note that this point here is a higher high, and here is a higher low. Here is a higher high, here is a higher low. So the downside here is a higher low, and at the top here is a higher high. Okay, so it is very key to understand when you open a chart, the first thing you need to check is the trend. Which trend are we currently on? Are we on the downtrend or we're in the uptrend? Okay, now for the downtrend in the market structure, as an element that I'm explaining, moves like this, like this. In this trend, we create new lower high and lower low. Okay, and our lower high is simply this. This is a lower high, this is a lower low, this is a lower high, this is a lower low. So every connection here at the bottom is the lower low, and every one at the top here is simply the lower high. So when you're coming into the markets and you see this kind of trend, you should know that we are currently on a downtrend. That is very, very important for you to understand in the market. Okay, the next trend, or the next example, or the last one in the trend directional bias I'm explaining, is the ranging or the sideways trend. The sideways trend. Okay, what you need to understand in the sideways trend is that the price move between the support and resistance line. The support and resistance line is a line where the highest point of a line where 2 or more candles meet. Okay, 2 or more candles meet at that line at the top, and the opposite is 2 or more candles meet at the bottom. So at this top here is my resistance line or resistance level. You can call it a resistance line or resistance level, and here is my support line or support level. So traders use this as a key way to understand that the price is actually strong in this kind of form. So when the price is strong enough, it's difficult to provide or to push the price above the support line or above the resistance line or below the support line. So we have the uptrend, the downtrend, and a sideways when you're talking about trend in the market. Okay, now the next part of the explanation of market structure is the swing point. Remember, I drew the uptrend and the downtrend the other time. So hypothetically, you can see a trend in this direction or in this form. So the swing point is actually the swing high and the swing low, and I'm going to break it down for you. This is a swing high, this is a swing low, okay? This is a swing low, this is a swing high, this is a swing low, this is a swing high, this is a swing low. I can just call this high, okay? That's no name, I can call it high. So the swing high and the swing low are the highest point and the lowest point of reversal. If you can see from this trend here, let me use my horizontal line to signify. From this line here, the price broke to the downside and moved again to break this swing high. Breaking the swing high creates another swing high, right? So we can definitely say that this part is a weak. This is a weak. This is a weak high, okay? You can call it a weak high, okay? And this is a strong high, okay? You can call this a weak low. This is a strong low. Now moving forward again, we have another strong high here, breaking down to another strong low. Moving to the uptrend, because we're in the uptrend form now, take notes. Moving to the uptrend, it breaks this previous strong low and creates another new high, which is the swing high. So we can call this very new one a strong high and call this a strong low. Are you following? Okay, so this you should just know that the lowest point of reversal of price or the highest point reversal of price are the swing high and the swing low. The way you have it in the structural shifts in the uptrend, you also have it in the downshifts in the downtrend as well. So in my example here in the downtrend, okay, this typically how it shows, okay? This is just the opposite form of what I explained the other time. So you have here your swing high, your swing low, here is your swing high, here is your swing low, here is your swing high, here is your swing low. So smart traders come into the market notifying the trend, right? Now, going to the trend, knowing the structure of the trend, are we in the uptrend or we're in the downtrend? After understanding that, we need to know if there are swing highs or swing low in the trend or just a ranging trend or sideways trend. Now, it is definitely impossible to have swings in the range. So you can't have swings in the range. So the example of the range I drew earlier, there's no way you can have swing in the range. Okay, this is purely support and resistance, right? So there is no swing high, swing low, or swing high or swing low, right, in this range. So to swing highs and swing low is basically when the price is going in a uptrend or in a downtrend. Okay, now moving to the next part of the market structure is the break of structure. What do you understand by break of structure? When you have a market trending, moving to the top or moving to the upside, breaking from this end, creating a new swing low, going up, create a new, you can call it high high or swing high. You can call it swing low here, you can call it high low. Okay, swing high, swing low, swing high, swing low. Okay, so this very point here, this is the break of structure. The break of structure. The break of structure. This means that the price breaks the previous swing high, okay, to create a new high. Okay, the price break this, it's going to the top, it breaks here to create a new low, create a new high, breaks here, create a new low, create a new high, breaks here, create a new low, create a new high, breaks here to create a new high continuously. So the breakout structure is very important for you to know if you are trading in the market, because it's a break. I just use this way. It's a break. It's a break. It's a break. So you have breakout structure, breakout structure, breakout structure, breakout structure continuously, because we're in the uptrend. So if we are in the opposite direction, which is a downtrend, it's still easy to identify. Okay, so in this form here, you already know that most of the traders uses this form to understand which trend are we, and if we are in the downtrend or if we are in the uptrend, you should always know that there is need for you to know the break, identify the break, identify the trend. So simply identifying the break or the trend is this break. Is a break, fail to continue, go below, create a new high. Coming, fail to continue, go below, break here, form a new high. Coming down, fail to continue, break, continue the low, create a new high. Coming down, fail to continue to the downside, break to the top, create a new high. So this is a typical example of the breakout structure. So the breakout structure happens when price breaks a previous swing high or swing low, and it always confirms trend continuation. When you have a break, there's definitely going to be a trend continuation or maybe something different. Now, the something different I mentioned just now is basically the change of character. Change of character is very important in market structure. When you have uptrend, creating new higher high, higher low, higher high, higher low, then suddenly create a new higher low, you got a break to the downside. Okay. Now, explaining this now, I'll show you that we are coming from the downside, going to the top now, we create a new higher high, higher low, higher high, higher low, higher high, higher low with our breaks, right? Our breaks is at the top here. Okay, now the market suddenly changed to the downside. So a sudden shift in market direction, that the price is breaking the lower high in the uptrend or in a downtrend, but now the price is breaking both the higher low and the higher high. So this current price now is coming to the bottom here, breaks this, remember, 1, then breaks this as well, 2, breaks this very one, 3, breaks this one as well, 4, breaks this one, 5, breaks this one, 6 to the downside. So we have several breaks now from the new price shifts, or from the new price change. So this change of character is basically like a signal for price reversal. Okay, the price have reversed and has stopped, continue to move to the top upside. That's why it's breaking. Ideally, it can just break maybe the swing high, swing low, and that's all, or this very one, and that's all. So this kind of change of character happens when there is a big news, when you have a big news, a big economic data. Okay, those are one of like the key things that happens in the market, or even like stop loss hunts. Okay, it could be some situation whereby the new market is opening and they are trying to like cover up with a stop loss hunt. So Change of character is very important for you to understand. Break of structure is very important for you to understand. Swing point is very important for you to understand, and the trend as well is very important for you to understand. Now let's go to a typical example of the chart so we could see clearly we could see clearly what we've been explaining. Okay, so I'm going to use the pull line. So we're coming from the bottom here, uptrend. Okay, this is a trend to the top, remember, going to the top, right? So from this trend here, swing high, right? I use this as our swing low, swing high, swing low, swing high, swing low, swing high, swing low, swing high, swing low, swing high. Okay, that's a typical example of a trend, right? The higher high, see the higher high, the swing high, see the higher high, higher low, 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 higher high, like that. So the downtrend, simple example right here, from here, lower low, lower high, lower low, lower high, lower low, lower high, and lower low. Okay, very simple. You can still call it the swing high, swing low, swing high, swing low, swing high, swing low, swing high, swing low, because the trend is in a downtrend. Okay, so knowing that, again, let's look for something ranging. Let's look for an example of a ranging. Okay, I can use this as an example of a ranging. Let me start from this one. Okay, from this form here, I could see that the price is moving from here. Yeah. Okay, this is a typical example of a ranging form or the sideways movement. So basically during Asian session. So you see this kind of example basically during Asian session because of the low liquidity and low turn of participants in the market. All right, so let's look for change of character. All right, so from this trend here, we're going to the top, right? Uptrend, swing high, swing low, or higher high, higher low, swing high. Then swing low, then this is a ranging, remember? Ranging, 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 ranging. Okay? And you can see from this point here, we move to the swing high. Then after the swing high, what do you notice? A fall of price to this part. So let me use the horizontal line to show it clearly. So the price moved from the swing high, swing low, swing high, swing low, higher high, higher low, swing high, swing low, higher high, higher low, swing high, swing low, higher high, higher low, higher high, down to this point here. Now this point has cleared all the structure that we've been talking about from the time. You could see, like, from this point here, the price was moving up, right? Up, up, up. Then we have some ranging here, up and down, like some ranging here. Then all of a sudden we got a big drop. Okay, countless of it. This is a change of character because it has changed the trend to the up from down to this form here, to where this horizontal line is. All these has changed from the up side to a change of character. So this is a sudden market change. This particular line is sudden market change in the market, like so, which breaks the previous high or higher low or wherever in the market. So this signals a reversal of point. So the price is moving, right, to the upside. The price is moving from this point to the upside, and all of a sudden, from this point, notice a reversal. So it's a reversal back to where the price is coming from. So this is purely change of character. It has changed the character, it has changed the direction, it has changed the trend. Okay, thank you so much for your time. In the next video, I'll be explaining more information about, or more understanding that you need to know when it comes to the market structure, the change of character, support and resistance level, and some other smart money concepts. Stay tuned. My name is Bash on air.